What's up guys? Simon here. In this video, we're going to talk about how the housing market just got worse. It's all because of the rising interest rates, the shrinking GDP. And in this video, we're going to go ahead and talk about what's going to happen to real estate investments, the housing market, and whether or not it's a good time to buy a house. So before I get into this video, I always ask that you guys like the video, subscribe to the channel if you have not done so already. Don't forget to comment below what you think is happening. I always read the comments and reply and enjoy it. So let's get into this video. Okay, so the housing market just continues to plummet with rising interest rates. Now, the interest rates have gone up since January by about 2%. That is high, and the GDP has shrunk since January twice, or in 2 quarters, by about 2.6% or 2.5%, I should say, combined in those 2 quarters. So this shows that things are going from bad to worse, because before we had a housing supply shortage, and now we still have a housing supply shortage, but that's going to be turned around with the many foreclosures that are coming on the market, as well as a decrease in demand because of high interest rates. So people are not buying homes like they were. They're not getting multiple offers on properties. Properties are staying on the market for a lot longer in terms of time than they were before. So the housing demand tumbled 14.3% to a 13-month low this end of May, and permits for new construction, which is a huge indicator, because if they are falling, that means less people are buying and remodeling, which means tightening is happening in the economy. Things are shrinking. People are holding on to their money. They're not developing. Now, this is in every area. So if you live in an opulent area with a good school district, etc., yes, there's still a demand because many people from neighboring areas want to move into that area. However, overall, the construction permits have decreased or fallen by 7% to 1.695 million permits, according to the Census Bureau. Now, those decreases are so much higher than analysts have expected. A lot of housing analysts actually expected the real estate market to continue to thrive, but just not at the pace it was right after the pandemic. However, in fact, the analysts who predicted the housing starts would fall were way off. The analysts predicted that housing starts and developments would fall by 1.3%. They were way off because 14.4% is the actual fall. And even though the construction permits fell by 7%, they predicted that it would only fall by 2.1%. So the real estate market is in trouble. You combine that with 5.5% average rates of interest in June and the potential foreclosures, which I mentioned earlier. Foreclosures are up 153% nationwide from the same period a year ago, 90% in the Bay Area. That is incredible. So you're going to see a lot of houses in the next few years coming up, and we might even be going towards a 2008 real estate like crash where people are just losing their hats on the real estate market. The National Association of Home Builders also showed that builders' confidence has fallen for 6 straight months. That is a troubling sign for the housing market. Builders are not building. They're worried. They are terribly worried that they will not be able to sell the homes, and their supply would actually add to another supply that's coming on the market from the foreclosures. So we're going to see both supply and demand side changes. And what I think is really hurting a lot of builders right now is the rising construction costs because of supply issues. Construction materials have increased 19% year over year. That is incredible. Construction material has increased year over year by 19%. That's incredible. That means if you're building a home for, let's say, $1 million, you're paying nearly $1.2 million to construct that home from materials alone. That doesn't even account the inflation adjustment for wages and other costs. And the increases of the mortgage rates has priced a lot of people out of the market from buying a first-time buyer home. And what's sad is the interest rates are expected to keep climbing. I recently did a video, could we see a 10% interest rate? And in that video, I discussed, is there potential? I reviewed the highest interest rates since the 1970s and where we are today in comparison to those, and what are we seeing with a graph. In fact, the 2008 crash I mentioned in that video had the same interest rate as the interest rate, or a similar interest rate as the interest rate we're seeing today on average. With inflation sitting at a 40-year high, there's no other way they can tame that inflation aside from raising the interest rate, which is further going to crash the housing market. The interest rates have had the largest increase in rates since 1987, and I think we're going to be in another 2008 coming up here soon. And hopefully a lot of you guys are ready to snatch up some good value properties at discounts. Just like the stock market is at its low points and possibly going even lower, those are discounted buys right now, which you should consider. According to Redfin, their chief economist said that the housing market correction has begun. Redfin is reporting big demand drops and price cuts on their site. They analyze all the data on their website, from price cuts to people looking at the pages to people favoring the homes, etc. They're a big data company. They're not just a real estate company. So they know the data. And according to their chief economist, the demand is dropping. According to Redfin, in June, the demand for real estate has declined 16% year over year. And that is the largest decrease over the 2-year period that we have seen. So guys, it's happening. Houses are just not in demand as they were before. Now, it doesn't necessarily mean houses are affordable. We're just at the cusp of seeing something that could potentially crumble. And with the Feds continuously raising the interest rate, we're not going to be out of that anytime soon. The only time I think the housing market will resume and even balloon again is when interest rates hit 3% again. Housing markets like Sacramento, Austin, including some areas in Florida, have begun decreasing in demand as well, which is pretty surprising considering how much of a boom we've seen from a California exodus. And you could check out my video on California exodus. I made this video a year or two ago and I predicted this would happen. So a lot of the metro areas, including San Francisco today and Los Angeles today, are seeing people still fleeing in terms of numbers of individuals going out and numbers of people coming back into the city. This is a decline that we have not seen in decades. So although they're calling this a correction, which is a positive spin on the real estate market, I really think we're in deep, deep trouble. And I want to know your thoughts as well on this below. So let me know in the comments, is the real estate market going to continue to fall with the rising construction costs, rising interest rates, lower GDP expectations, less homes being built, demand going down, you name it? We're seeing a ripple effect of all those things affecting the buyers of real estate. You add foreclosures as a sprinkle on top, with foreclosures going up 153% nationwide, and I think we're in trouble. I hope you enjoyed this video. Comment below if you did. Let me know in the comments what you thought of it and add to it. Like the video if you haven't yet. Subscribe to the channel if you haven't done so already. I'll check you here in the next video. Thank you.